Good morning, room. How you guys doing? So the market refuses to roll over here, but well, this is suggestive that it could keep going higher, meaning the gap down that occurred yesterday and the recovery was whipping around yesterday and came all the way back. So question is, can it take that high out and keep running? Well, we'll see. Here's the high point that it backed off from. And notice how it just kind of like pokes its head over the prior high, right? So this is the overnight trading, this grayish area there. And it came right back in again. So this 256 level, just getting back down there again, the buyers could show up again. I mean, it becomes a trading range, right? So this is where, it poked under. There was the retest pre-market yesterday, and then it moved up again, and now it's up here. And so is this going to be a trading range? Does it go sideways up here? Those are the things that we want to look for today, to where then it maybe pushes up to test the 260 or maybe this 50 MA. There's an unfilled gap over here. Clearly, when I said this yesterday, I said they're not going to give up easy. They typically don't unless there's a shock. So there was no real shock yesterday. I mean, it opened lower and turned around there and, back up again. So what could be a shock could be today is a complete retracement or a red bar after this one that comes all the way back down to yesterday's low. And then we'd have a bearish 180 reversal. And that could set up a pullback. But unless we see that, if it hangs up here, well, clearly if it goes up, it's going up. But if it goes sideways up here, while this isn't really a wide range bar, we use that 50% area as just a line in the sand to say how much is negated of that green bar, because now we have a more complete, larger green bar that opened close to the low and closed up near the high, which is what we would say is like that's a decisive bar, saying that it's going to go higher. So looking at that, it's like, okay, buyers are still in control here, moving it up. They're at resistance. They're not giving up. They're buying the dip. And that in of itself suggests that it can go higher, regardless of the resistance. And even though it broke a prior bar's low, sellers couldn't hold it down there. And then we'd be looking for lower prices. So it can go sideways, up, or down, clearly. So if it takes out this high and it can hold on to the gain, well, we'd look at that 50 MA, possibly that unfilled gap. Or if it reverses back down today, negating that would be, not a total shock, like as if it was gapping under that bar today. That would be a big shock versus, okay, we're starting up here and going all the way back down, which would be at the bottom of the trading range. And then what we would look for is, as you would in any range, okay, it's down at the bottom of the trading range. That's where buyers wanted to step up before. Will they step up again? Can they lift it back up to the top of the range, or does it go sideways down there, which would open up the door to this void, and then the beginning of a drop? So that's a general principle, is that what is the reaction to a reference point? Just like we have up here, what is it going to do? So far, it's going sideways near this prior high. That's bullish. So as long as it can hang up here, and if it clears this high, the assumption is that it goes higher. So if you're so inclined to buy an intraday breakout here, even though it's up this far, thinking it can go higher, you do it. We don't know whether it'll continue. Sometimes you get breakouts that fail and they come back in again. That's additional piece of information. Right now, this is in an uptrend. It had that pullback. It came right back again. It's hanging up here. And that says that buyers aren't running away. They think it'll go higher. We'll see what it does. Same thing with the Qs, right? So far it's going sideways at the high. We got the similar type of bar, but the 50 MA is right here. While it's a subjective reference point, it's one that is widely followed by institutions and traders, that moving average on a daily time frame. So it's likely to have some effect. We'll see. So is the 20, but it had little to no effect, as there's nothing to the left there, and it just continued to march higher up into this area. So we'll see. Same story. Can it go sideways and pop higher to keep going, or does it come back down to the bottom of the range, and then does it go sideways, or does it go back up again? So clearly this is moved up into an area where sellers should try and take control. They gave that a shot yesterday. It didn't work. So we'll see what today brings. Russell, right? Same story. Right? Similar pictures. This has got the resistance right there. The 50 MA is perfectly aligned with that resistance. So that should be a pretty strong reference point for sellers to step up in this area. Transports came back as well. So as prices came back, right, everything kind of just lifted up. And those that are shorting, based on these prior patterns, these areas, traders just short into there. They buy the cover and they say, okay, not happening here. Maybe can continue to go higher. We'll give it another shot at a higher price, or unless things fail. Right now, obviously, the failed attempts aren't working out and buyers keep stepping up. And that was somewhat anticipated in that they're not going to give up easy, and they're not. So we'll see if it happens today. Same story in the Dow, meaning we got this bar that opened lower, gapped lower, closed near the high. It engulfed that candle. It says it should keep going up. We'll see if it does or whether it fails. Futures are down here a little bit, no big deal. They're just consolidating up in this area. And they tried to push up here a little while ago, actually 3 o'clock, 4 o'clock in the morning. But it backed off from that area. It's close to that 2,600 number. They are backing off from that. 1 second. So as I look at this, of course, the same questions that I've already said, but looking at these futures, maybe we get 3 days of going sideways here. And while that could be a launch pad up to the 50 and our next resistance area up here, well, if those 3 days, this turns into a red bar down here, we've now got this larger area in the 60-minute chart start to take a little bit more ominous look to it as a top, based on that time frame. And then, of course, we can break through that 2560 level. Well, that opens up the door to lower prices. And while we got this little low here, and it's a question that often comes up, well, what about that low or that support area? Well, when I look at a support area versus a resistance area and the price action at that resistance area, let's say there's some kind of a shock pattern up here, a failure pattern, like a breakout failure and such. I always look at it like, well, here are two forces. Which one is the bigger? Which one looks like it has more power? So a larger reference point up at a high here and a failure, as opposed to just a normal kind of pullback with a void below, I make the assumption that this is not going to hold. And it's just an assumption to, have a plan as to what the probabilities are, and then we wait to see what's going to happen. NASDAQ, same thing. Right? All these markets are pretty much the same, but you can see the 50 MA is right here. So we'll see where this ends up here at the end of the day. And same story there in the Dow. Sometimes these patterns don't match so closely. They look very different, but at this point in time, they look almost exactly the same. So it's a little bit unusual because last year or so, I'm used to seeing differences in these patterns. But now they're moving in lockstep, and maybe that is in part why breadth has moved up to the extreme level that it has, and we'll take a look at that. So that's just a thought that's coming to my mind as to the unusual level that breadth is at. So while that does indicate strength, I'm thinking as I'm looking at this, and I'm just giving you my thoughts as they're coming into my head here. Why is breadth that high? Why is it that strong? Well, why are all of these markets moving in lockstep with each other? So when we look at a breadth market internal, and I'll just bring that up here. When we look at that, it's looking at thousands of stocks across different sectors. So let me just set that. You can see the level that it's at here. And as I'm thinking, that is probably the reason why, because you have so many different market indices and sectors that are moving in lockstep with each other. But that does not negate the fact that they're all in downtrends in the monthly, weekly, and daily timeframes. And that suggests lower prices. So we'll see how this unfolds. But, the markets are always doing something different that you can learn from to add to, your experience within the markets. And, so this is a little unusual. I think we reviewed, Alex, in the green room, you brought up that it was like 2016 the last time that we had a McClellan breadth internal up at this high, but that also was followed by a deep retracement afterwards, and then a market advance. So we'll see. Now, the other thing that we've been talking about is the fact that the wrong way option traders, right, we're measuring sentiment here, have not stepped up to the plate, even though the markets have advanced off of this low quite nicely. They're still in disbelief and not loading up on calls. And that has kind of led me to thinking, well, okay, downtrend, resistance, and so on, but we really need these, idiots, as I finally call them, to jump on board at the worst possible time, which is what historically they do. And even looking at yesterday's close with the market coming back, this number should have been up here in the red. So they're continually betting against this market going higher, or hedging their longs, whatever. They're buying more puts than calls. So there is this bias that this market cannot go up. And eventually it's going to turn down. And to what extent, I don't know, of course. But historically, what happens is these option traders load up that it's going to rip higher at the worst possible time. And we're not seeing that. So, this moving average is inching up into this lower band here. So we'll see what happens today. If there's some strength today, maybe they'll step up and that'll happen. So that's, what we keep an eye on, sentiment and breadth. And this is just the day-to-day closes that this moving average is based on. So be watching to see if this can push up or what this does. And that would be a heads up in of itself that the market's ready to pull back. But we'll see if this closes negatively today. Well, then we'll have a sell setup. And bonds, right, reversal but deep retracement. We'll see if that turns back up from here. And oil was up at this resistance and it stalled. Right? It's what would be expected. There was the wide range bar up into that area. So far, a topping tail, it's still early. We'll see what happens here, whether oil can clear that or it starts to pull in. And gold just hanging up there, which is bullish. So it had this run. There's resistance over here to the left. That's why I have that line there. But so far, we're getting red bars ignored, which says buyers keep stepping up here on these dips, and that's bullish for gold. So unless the buyers blink and it can break below this level, this moving up like this and this type of price action is suggesting that it'll continue to go higher. So we'll see what's going to happen there. And I'll leave the rest to you, Dan.
All right, good morning, folks. Yeah, so we tried doing some call spreads yesterday and, churned on back. We need a more potent reversal to get more confident. Yesterday was great, though. Look at the spiders here, upper left, 15-minute chart. With, the overbought internals, even though Greg showed us the sentiment is not as bearish as I was looking at on that other thumbnail thing. But yesterday we had a nice bearish pre-market, started to break down, and then it, ripped back up. And I said into the close here, this is very bullish consolidation into the close. And so we look higher. I don't care about the overbought internals. We're going higher until we're not. So now here we go again, Groundhog Day, gapping down. I'm not getting sucked in, to a 5-minute breakdown today. No sirree. I'm probably going to be waiting 30 minutes. But if this just goes sideways here at the low and cracks a 30-minute low, then I will be selling an out of the money, spider call today, the 259s. Those are the ones we did yesterday. Open positions. Joan, I told LaDon in here that because they expired tomorrow, because we would get time decay overnight, that I could totally see holding them. And he did hold them, and it paid off for him. But unfortunately, the posted stop on the spreadsheet stopped out, unfortunately. And we had a long talk yesterday on this afternoon breakout, and I didn't want to officially cancel, say hold it overnight, because then I was saying that if we went up another $1.50 to $3, I didn't want anybody sitting in that pain if the daily wanted to keep churning higher, deeper into this level. So it was a tough decision, but because of the nature, I would not have held SPY short. But since it was a call spread that expired today, it was only a $3 wide. So, we're looking at risk to reward again in terms of, look, if I close it out now at 90 cents, my break even is 259.90. Do you follow that? Closing it out yesterday at 90 cents, you could analyze it by saying, do I think this is going to, go much further than 259.90 tomorrow, meaning today? And so all those factors said it's a calculated risk, but I totally could see holding them. Tilray, yeah, I got a 5-minute here. It looks like it's cracking a new lows right now. This morning it was up 20%. We did that video yesterday. I showed you live how I was selling 2 different strikes of naked puts. I sent out a text alert this morning saying, let's try to bid a dime to 15 cents and close these things. They're going to be spready. I already put my GTC orders for mine. We'll look at the spreads. And you know what? Another trick I'm going to show you because of the spreads. We might even try to close a higher. So Trader Paul, listen to this, and because this is a cute little trick. When you deal with kind of illiquid options, instead of buying to close the one that we're in, if you can see a very low bid on a higher strike put, try to buy to open that one, because then we've converted our short put into a free bear put debit spread. Now, if y'all don't follow that, don't worry about it. I'll walk you through it live when we slow down. So that one's fine. Whiskey Bravo, we have a put spread. DNR I didn't trigger. It's a little oil stock. I like the basing here, but my only concern is, it's lagging the oil sectors that have been bouncing, which are now overbought. So I'll still keep an eye on him. And finally, we have Alex's little tandem. We're long at 25% lot, right around 40 bucks. So up $2 and change, but we have not added to it yet. All right, let's look at a couple of things. I saw Alex was looking at AXP and Nike. I like your AXP much better than Nike, because Nike is right on minor support. Look at all those football players. See that? Whereas AXP doesn't. You got a more of a price void both intraday, and you got a sell set up on the weekly. SNX, another beautiful put selling candidate pattern. I've been writing a bunch of these down. We'll go through them again in a slow time, and I'll hit the little record button. But I got like 20 of them over the past couple of days. They're just great patterns to sell puts on, because you have a wall of support below. UPS, I saw Alex mention. I like this for a put spread, but you've heard me say the last couple of days, I'm really on the long side, just in day trading mode, because of the internals, both spiders at resistance and overbought markets. But this is a pattern that looks great, looks awesome, both for a day trade and a put spread. Hey, Trader Paul, do you remember what I said yesterday about Weight Watchers? Not that I said, that Alex needs to get a subscription, but I was saying when we wanted to short something, look at this weak animal. Oh shit, he was listening. Look. I like shorting weak animals. I don't short strength. Look, so if you compare Weight Watchers to Nike, it's a no-brainer to me. This is getting on board a moving train, but it's still a weak animal. And look at it gapping down $2 today.